Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we will be doing technical analysis on the S&P 500 for Friday, February 6th, 2020, and we will be using stockcharts.com for the charting service. I do pay for this service, and I will leave a link to their site in the description box below this video. So first off here, we were down 1.71% today on the S&P 500, closing at 2972.37. This is a 10-minute, 7-day chart. So this is the last 7 trading sessions. Each candlestick represents 10 minutes of trading in the S&P 500. And you can see here that we closed near session highs, not exactly at, right, but close to session highs. So that's something that's positive. And we are over 100 points higher than where we traded on Friday of last week. So on the 28th, you may remember that we hit that intraday low of 28.55.84, which was 1/10 of a point lower than the lowest point that we saw last October of 2019, and I'll show you that on another chart. But the good news is that we actually did have a positive week this week, even though it doesn't feel like it with all the volatility. We were up about 0.6% for the week, 0.61% to be exact. And so we did have a positive week, so that's something to enjoy. And, we closed towards the session highs. So all things being considered, it wasn't horrific. Unfortunately, we did close underneath this 3,000 level, so that may act as some overhead resistance next week if we're fortunate enough to get back above and have a positive week, or at least attempt to have a positive week next week. We'll have to keep an eye on that. Now, this is a daily chart where each candlestick represents 1 day and the time span is 9 months. The reason I wanted to point this out, and I have this blue line here annotated at that 28.55 level, again, where you see my cursor moving in the lower right-hand side of the chart, that is where we kissed that line, that 28.55 area last Friday. And again, you can see that's where we traded down to in October of 2019. So guys, to get some perspective on this, let's realize that really all we've done so far is we've kind of round tripped where we were in October of 2019. So yes, it has not been fun, and this is potentially a very horrific situation, and it could get a lot worse, no doubt about it. But so far, all we've done is given back our profits from October of last year. So we've lost 5 months of gains, no doubt about it. It's not fun. However, as bad as this situation can be from a human perspective, thousands of people have died. Tens of thousands of people are very sick with the coronavirus. So far, it hasn't really been super damaging to the charts. And to really understand that, let's pull back to a slightly longer time frame. So now this is a full year, where the previous chart was 9 months. And you can see here that we're trading, kind of in this thicker area now. We closed right here at that 29.72.37 level. And so there's quite a bit of trading from the summer and fall area of 2019. So that, hopefully will act as some support. And then when we pull back and look at the 2-year chart, what we can see here is that if we continue to go lower, these areas should come into play. So we can see, again, this is that 28.55 level that we hit here. We had quite a bit of trading around that in the month of August, traded below it and then above it and below it and above it. So that 28.55 area should provide some level of support. And you can see there's quite a bit of trading going back even a couple of years in this area. If the 28.55 level does not hold, then 27.50 would be kind of my next downside target, somewhere between the 27.25 and 27.50 area. You can see that we had some trading down to that and kind of tested that area back in the latter part of May, 1st of June of 2019. And again, in March of 2019, we traded down there. And then you can see there was quite a bit of trading in October, November, and early December of 2018, and again, back into the March and then June, July area of 2018. So, as we fall deeper, if we do fall deeper, which I think is highly likely, the rate of descent should start to slow. We shouldn't we shouldn't see the same rate of decline that we saw here. The rate of descent, more than likely, based on the technicals, should slow down. However, it is totally possible that we lose 100% of our gains that we saw from the end of 2018. So we do want to be careful here. This is not a market that you want to take lightly. We did see some positives this week. We had quite a bit of sideways trading, between 3,000 and about 3,100. Obviously, that 3,000 level did not hold today, but we didn't close substantially below it. So, if we get lucky next week, we can climb back above the 3,000 level, maybe get back above the 200-day moving average, which right now is setting at 30.5182. I think that would be, I think that's being very optimistic, but it's not completely out of the question. Keep our fingers crossed that the markets continue to hold up on a relative basis. And just understand, guys, that so far there hasn't been a tremendous amount of damage done to the charts. Yes, we've round tripped where we were, just 5-6 months ago, but that's all that we've done. So, let's be thankful for that. Keep our fingers crossed that it doesn't get any worse. At the same time, guys, understand that there's a lot of unknowns here, and there's a lot of companies that are losing a lot of revenue around the globe. And so that will more than likely continue to affect profits, and the uncertainty around this situation, the coronavirus, the global economy, companies' earnings around the globe, the uncertainty around this. People that are uncertain don't spend money, right? When we're fearful, we pull back. So it becomes somewhat of a self-fulfilling prophecy in that the company's earnings will, and I'm talking about just generically, right? Companies' earnings in general across the globe will suffer because the lack of clarity will cause people to not spend. They're going to cancel vacations. They're going to cancel meetings. To think that this situation is going to get better before it gets worse, I think is being a little too naive and optimistic. It's possible, no doubt. I don't think it's highly probable. I think the line of least resistance is still to the downside. So don't get too gutsy here, guys. Keep your powder dry, and just understand that, if we have a bad week next week and we break this 28.55, I think 27.50 at least to the downside, at the very least, we see this 27.50 level, and then you can see that, we could drop further from there. And, and again, to think that we couldn't get down to this 23.50 level again and retrace 100% of the move that we had from the end of 2018, to think that we couldn't do that is again, I think we're fooling ourselves if we think that can happen. I hope you enjoyed the video that you just watched. Other videos I think you might enjoy would be the fallacy of diversification, bond yields and interest rate sensitive sectors, also S&P 500 ETFs versus mutual funds, what are junk bonds, how to build $1 million 401k or $1 million account, period. It doesn't matter whether it's a 401k, IRA, non-qualified account, trading account. These are all just other videos, guys, that I have out here that if you haven't watched them, I'm telling you, look at this, 3 ways to build wealth. And right now I've got 4 views on this thing. So this is a very educational video. Also, how bonds work, the rule of 72 and compounding. How much is $1 trillion? Guys, with the massive debt and deficits around the world, both in the U.S. and abroad, you've got to watch this video. How much is $1 trillion? It really puts things into perspective. It's really, really good. Also, why stocks go down, why stocks go up, why losses matter. This will help you understand why you have to cut losses and let your winners run. So this is a super educational video as well. And then, you can get into more basic things now. How to become more successful isn't really about the stock market per se, but it will help you become more successful in life. And of course, if you want to watch one of my longer videos that is extremely educational, the Successful Investor webinar, I go into a ton of things that most people do not understand. And with my 20 plus years of financial services and 40 years now of studying success, I put a lot into that video and in all of these videos, guys. So go out here, check out some other videos. And if you haven't already done so, please subscribe. Give me a thumbs up on the video that you just watched. and I look forward to seeing you in the next video.